You're listening to Ron Siegel Radio on ESPN Radio 1700. Now, live in studio, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team, when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990, and welcome to National Raspberry Bombay Day. I'm looking at this one online here, and it's I can always go for something along these lines. Frozen summer delight is sure to please your taste buds and be a great finale to your meal. A typical Bombay contains sherbet, heavy cream, sugar, chopped nuts, candied fruit, and a dash of rum, maybe a little more than a dash of rum, layered in a spherical mold and frozen overnight, creating a centerpiece dessert. Looks good to me. Yum. That one might be pretty exciting there. Checking out the markets for you this morning. What is happening? Well, the Dow Jones up 128 points. No good reason for that. Oil up $1.46 a barrel, and the 10-year Treasury up about 3 basis points, yielding 1.536%. Germany still negative yield, and Japan is still a negative yield, getting a little bit better than they were, but still negative yields nonetheless. And we did get the mortgage rates coming out this morning. I shared with you earlier in the week that I anticipated the mortgage rates would increase. They did ever so slightly. 3.45 is the Freddie Mac Mortgage Market Survey rate for this August 11th. Again, that's you have to remember, again, that is a survey of companies. That's not just one company's rate. It's a survey of companies, what their numbers are. And they do those surveys, again, as I've shared with you, Monday through Wednesday. Most of the companies that are surveyed do theirs right away, get them off their desk, and send them in. So even though we had a real nice day in the bond market yesterday, rates went down yesterday. That's the number that came out for the week, 3.45. Again, that's going to be your top level borrowers. It does include a 0.5 point buy down of the rate is what the average company is charging. They're charging a 0.5 point. So what that means is if you are getting a $400,000 loan, that 3.45 rate, that the Freddie Mac rate that they're talking about, is going to cost you $2,000. Doesn't talk about any other loan origination fees or costs. Obviously, you know our friends over at Gold Star Mortgage. They don't charge any lender fees, so that is a good note for you. Again, if you want to meet them, just give me a holler. I'll put you in touch. 3.45, the Freddie Mac Mortgage Market Survey report for this date. And again, what is it? What's your family looking like? How does that affect your family? I just suggest that you always take a look and see what the meanings are, how this affects your numbers. There are folks, I just talked to somebody yesterday looking at, am I going to save enough money for it to make sense for me to restructure my loan? And my comment was, I don't know, what makes sense to you? How that's a different number for everybody. Some people, they like the idea of saving $50 a month $18,000 over the life of a 30-year loan. Some people say that $50 doesn't mean anything to them. I'm one that, money's money. If I can do it, especially with no lender fees, sometimes you can even get them where all the fees are wiped out completely because of the rates, and it still makes sense for your family. I'm going to be of the school that says, why not save money? What is an hour of your time worth? Or 5 hours of your time, multiply whatever the hourly rate is, 5 hours. If it's going to save you $18,000 over the life of the loan, $50 a month, $18,000 saved? Seems pretty decent to me. I don't know what you make an hour, but for the most part, and here's the issue. I'll share this with you as well. When you're doing a loan, here's the assumption that I would suggest everybody make. It's going to take you, of your time, about 5 hours to do the loan. If you have an experienced loan officer, they're going to need about 5 hours of your time. 4 hours you're going to understand. 1 hour you're going to think is a waste of time. Humor the loan officer with that, because if they make a mistake, it can cost them or their company huge amounts of money. So I'm going to suggest humor them. Let them just do it with them. Waste that 1 hour. But if they know what they're doing, again, it should only be 5 hours. So 18,000 divided by 5. Now, I don't have a calculator right in front of me while I'm on air, but I bet that's a pretty good sized number. I don't know too many people that are making $3,600 an hour. And what if you only keep your loan for 5 years, 7 years, as most of us do? Still a good amount of savings. Better in your pocket than the lender's pocket. Just my thoughts. Weekly jobless claims, they came in. 266,000 people lost their jobs. They filed first-time unemployment benefits for the week. 266,000 people. Again, when we talk about those numbers, we look at them in the light of, the president, the administration tells us how great our economy is doing. And you look at those numbers and say, okay, if 266,000 people, they're probably not real excited about what's happening in our economy right now. Amazing. Speaking of amazing, this is an amazing story. I saw this, I had to share it. College students are back in the news again. Unbelievable. Framingham State University in Massachusetts. Unbelievable.
You're absolutely useless.
So college students demand counseling. They demand counseling after being traumatized from seeing a single Confederate flag on a laptop. Oh. Can you believe that? What a bunch of poor little babies they are. I mean, why don't they grow up a little bit? It's amazing. A Confederate flag will traumatize you. I hope that they're not studying history in this course, or political science, or criminal law. I wonder how they'd feel if they were traumatized by the 266,000 people that lost their jobs this week. Unbelievable where we've gone in our country with some of these issues. I can't say what they would have told me when I was in college if I made a claim like that. I mean, can you imagine what would have happened there with you if you made that claim? Just a thought. Moving right along. Another one of those House probes, House of Representatives, came out with a report. The U.S. Central Command was skewing intel on the ISIS fight. And here's an interesting commentary. You got to really look into this one and understand. The allegations surfaced last year. The White House insisted no one in the administration pressured anyone and suggested blame may rest with the military.
So I know whose ass to kick.
Who is the commander-in-chief of the military? Yeah, and let me ask you this other question. I mean, I might be a skeptical individual, but would you trust the administration or the military? For me, it's a pretty easy answer. With what we've seen from this administration, I think I'd be trusting the military hands down every day, all day, over what we might hear from this administration. And now with all these leaks and the pay-for-play coming out with the Clinton Global Initiative and the Clinton State Department, not going to be the beacon of honesty that we might have expected. Unbelievable. Again, all we can say is...
You're absolutely useless.
Exactly. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, luxury home sales and the impact of the stock market. Ultimate money checklist to complete before buying a home. The Fed says they are going to raise rates this year. A Reuters poll. We're going to talk about that as well, and we might even try to get to our discussion on how you can retire on $18,000 a month. All that and more. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by the Siegel Lending Team. Yes, they can get you any of the loan products you might need. Private money loans, if for those really, really hard to do transactions, the team has investors to put you in touch with, as well as the basics: FHA, VA, refinance, streamline, interest rate reduction loans, mortgage insurance elimination loans. All of that available from the team. Just give me a call at 800-306-1990. I will put you in touch with them. So the issue today, the ultimate money checklist to complete before buying a home, is our subject today. So what do you need to be doing before you're buying a home? And I share this on a regular basis with a lot of folks offline. I thought I would just discuss it online today, on air today, just because it makes a lot of sense. Renting is... There are very, very few times that I would say renting makes sense, and it's not for most people. For some people, yes, renting might make sense. But I'm a big believer in checklists, and I shared this with you earlier in the week when Aaron Zapata was here. We were talking, Aaron and I both talking about the idea about checklists. And we both are big fans of checklists. Why? Because so many things that we do are repetitive. Now, you may need to do a little tweak here and there, but for the most part, if you create a checklist for transactions or for activities, you're doing a lot of them over and over and over again. If you've taken the time one time to do the checklist, then what ends up happening is you'll find out that you don't miss as many items, and there's a lot, the transactions are smoother. So that's why I'm such a big fan of the checklist. Now, every checklist, you have to be flexible in there, but again, they've got a lot of similarities to them. So the home buying checklist is what we're going to talk about today, and do these things in the order that I tell you, and I think you'll find life's a lot more enjoyable in dealing with your new home purchase. I'm going to share with you, when you buy a home, it is going to be some of the best times, worst times, and best times again. I correlate it, and obviously I don't have first-hand experience. I do have second-hand experience, that buying a home, you might correlate to having a baby, right? You go through, you have good times. The pregnancy period made ups and downs. Labor, I understand, is not a lot of fun. But once you have the baby in hand, good times again. Same idea with the home buying process. Getting ready for the mortgage, doing the mortgage, that's not the best, most exciting times of the loan. But it's a necessary evil, kind of like labor. Shopping, probably not the best time. When you close escrow and the agent gives you your keys, just like putting the baby in your hand, it's a great time. So number one on this checklist, get a steady income. If you're changing jobs all the time, it's going to cause a problem for your loan process. You need to have steady income. Now, if you're changing jobs, if you're within the same industry, you can sometimes get around that. But basically, you want to have steady income, steady job, something that can be tracked for a period of time. Calculate your debt-to-income ratio. Most people have no clue what the debt-to-income ratio is. But basically, the debt-to-income ratio, there's two different numbers involved here. Your debt-to-income ratio is going to be, on one hand, you're going to be looking at your income, obviously. Steady, documentable income. If you get commissions, you have to be able to track it or demonstrate that it's been consistent or rising for 2 years. Overtime, same way. You've got to have consistency in there. That's going to come from your verification of employment. So here, that's the top part of your, or the debt part, or the income part of your ratio. Debt, you've got two numbers for debt. You're going to have front-end debt, back-end debt. The front-end debt is all your housing expenses. That's going to be mortgage, interest, insurance, taxes, homeowners association, mortgage insurance if you have any. Add all that together and you divide it by your income. That gives you your what's called the front-end debt-to-income ratio. The back end is taking that number and adding to it all of your fixed long-term expenses, anything that you're going to have to pay for more than 10 months. Add that divided again by the income. That's going to give you your back end ratio. You need to understand what your debt to income ratio is. Again, very, very simple, but it is an important component of what you need to know because you're going to have different programs that are going to require different ratios. You're an experienced loan officer. When you get together with an experienced loan officer, talk with them on the phone, that's one of the first things they're going to do. Now, key component here is get started with an experienced loan officer, not at one of the big banks. If you can walk into a big bank and they've got the blue sign out there, the Stagecoach or whatever, that's not where I want you going to get a loan. Why? Because those institutions are fine institutions, fine people, but what ends up happening is they've only got their programs. They're not shopping for you. A mortgage banker, not broker, a mortgage banker, direct lender, can work as your personal shopper. They're going to be out looking for you, who's got the best deals. They're going to be shopping at those big banks that you can walk into, but they'll also be shopping at insurance companies, smaller banks, banks that are in the Midwest, East Coast, all these different institutions that you're not going to really have access to. That's what they do. They are your personal shoppers. That's the first place to start is with them. They're going to help you calculate this debt to income ratio and see if you are within guidelines, what kind of programs you need to be dealing with. They might talk to you about what's called a game plan. And the game plan might be to pay down certain debts because if they are experienced, they will understand that they can make your credit scores look better by paying down certain debts over and getting your numbers better and understanding these things. Number 4, watch credit card payments. Now you might, when you're doing your bills, you might be saying, okay, I want to pay the highest interest first. But when you're in the process of getting a loan, what you want to be doing there is you're going to be needing to understand what ratios you need to work with. Do you need to be dealing with getting all of your credit cards, even maybe one that has no interest, but you want to get it under 30% utilization rate? That's going to help your credit scores. Sometimes you can do that once they've already pulled credit, get a rapid rescore, and get your credit score improved, enhanced, and then you end up with a better loan rate, a better mortgage rate. That's a big, big benefit for you. Again, all we're looking to do here is see how you can be best positioned to get the best possible loan for your family. So and one of those issues, one of those items there that I want you to understand is most people, vast majority of the people have no idea what they need in a credit score to get their home loan. It's amazing. People think you have to have a 780, an 800. No. You can there's loans down as low as 500. I'm not sure that I recommend those, but you can get loans down as low as 500 FICO score. But by doing some of these things and having a strategic plan, you can get your scores up. I shouldn't say almost. I don't think I've ever seen a credit report that didn't have errors on it. Every single one of them have errors on them. And I've been looking at credit reports since the 80s. I know they tell you that only 20% have errors, but I'm here to tell you that almost every one. I've never seen one, even people with near perfect credit will generally have some errors on them. So take a look at that with an experienced loan officer. Make strategic decisions on what to pay, what not to pay is equally as important. There's some items that if you pay it, you're going to be looking at a decrease in your credit score. I know it sounds counterintuitive, but you could be looking at a decrease in your credit score by paying a household debt. So that's just a thought right there. Determine your monthly budget. Just because you qualify for a program doesn't mean it's in your family's best interest. Maybe you qualify for a $3,000 or $4,000 a month payment, $5,000 a month payment. But when you look at your budget and your goals, maybe you only want to stick with a $3,000 payment. Well, knowing your monthly housing budget can really help in that instance with not being married at the end of the day to a mortgage payment. That's a big issue right there. You don't want to be married to that mortgage payment. We're going to continue this conversation on the money checklist to complete before buying a home. When we come back, you're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets, luxury home sales, and the impact of the stock market and the Fed to raise rates this year. That's what Reuters is telling us. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay's on Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
With more than 25 years of experience, ATI is a national leader in restoration, environmental remediation, and reconstruction. We're proud to be the nation's largest family-owned restoration contractor. ATI has over 700 full-time employees and 15 offices across the county. Our services include 24-hour emergency response, water damage, fire and smoke damage, lead, asbestos removal, mold remediation, and much more when the need arises. Call 1-800-400-9353. That's 1-800-400-9353. Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
37% of American homeowners believe they have over 20% equity in their homes. Fannie Mae tells us 69% of American homeowners have over 20% equity in their homes. Fully 1 in 3 American homeowners are not informed about the amount of equity they have in their homes. Are you one of them? How might this be holding you back from achieving your goals? Text RSR CMA to 79564 to get a property valuation from one of the area trusted professionals of Ron Siegel Radio. Again, to know how much your home is really worth, simply text RSR CMA to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the real estate professionals of Ron Siegel Radio. Text PAIR, P-E-A-R, Professional Equity Analysis Review to 79564. One of the area trusted real estate professionals will reach out to you to get you the true equity position of your property. Text PAIR, P-E-A-R, 79564. In a recent post, CoreLogic looked at the correlation between stocks and the sales of upper-end properties. That would be the $1 million plus sales price. Here's a little bit of the findings of the report, and I'll quote: the powerful wealth effects generated by the rapid rise in equities between 2009 and 2015 drove a large rise in the sales of homes that sold for more than $1 million. Historically, sales of homes priced $1 million or more averaged 1.2% of all home sales. The spread between high-end sales and equities widened during the housing bubble, but then moved more closely in unison. By the time the equity markets had peaked in May 2015, the $1 million or more share of the market had nearly doubled, averaging 2.2% for the remainder of the year, unquote. Makes sense. As people see their wealth increasing, they feel more confident in their purchasing power. And, of course, that would also impact their decisions regarding real estate. The stock market dipped earlier this year, and quite a bit of an anecdotal evidence that the upper-end market was beginning to soften. So I'm going to post a chart here, and we can see the chart that the market is again flourishing. That may rejuvenate the luxury market as we go through the rest of the year. Very, very interesting report. As we proceed through 2016 and enter 17, the strength of the stock market will be a key factor in the strength of the luxury market. If the markets falter, look for high-end sales to slow. If the market advances, as it has shown signs of doing most recently, the high-end market will advance as well. That is the real-time real estate segment, again brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text PAIR, P-E-A-R, to 79564. One of the area-trusted real estate professionals will reach out to you to get you the true equity position of your property. So before the break, we were chatting a bit about the ultimate checklist to complete before buying a home. And I'll just go through, I'll recap a little bit. I'm not going to go into detail on these from the conversation we had earlier. Again, if you missed any part of that, Ron Siegel 1 on YouTube, Ron Siegel the numeral 1 on YouTube, or you can go to ronsiegelradio.com. And in the archives, we'll have this posted. So number 1 was get a steady job. Number 2, calculate your debt-to-income ratio. Number 3, pay down debts. Number 4, watch credit card payments. Make them strategically. Number 5, take a look at your credit. Number 6, determine your monthly housing budget. Number 7, determine your down payment. You've got to know how much money you need to buy a home. Again, many people have no idea of how much money it's required. The biggest thing I hear is like, oh, got to have 20% down. Well, that is a good goal, but it's not a requirement. There are down payment assistance programs that will allow you to make a down payment of as little as 1/2 of 1%. 1/2 of 1%. FHA allows for a 3.5% down payment. Now think about 1/2 of 1%, what that means. So a $400,000 house you can buy with a down payment of $2,000, or you can go out and buy that Apple computer. Think about that. Now I can guarantee, and I don't guarantee a whole lot, the Apple computer will depreciate rapidly. The house most likely is going to appreciate. You're going to get more money back than you bought it for. Just a thought right there. So compare that 0.5% down, $2,000 on a $400,000 home. Compare that to the down payment for a lease. Yeah, the down payment on a lease. That might be your first and last month's payment, maybe a security deposit, pet deposit. All of those things go into that. So understanding that. Now, if you don't have that, if you can get 5% down, that's great too. It'll save you some money. But either way, get in the game and compare properties. After you determine your down payment, you're going to have to document where that's coming from. Is it coming from a gift from mom and dad, grandma, grandpa? Coming from maybe retirement funds? Do you have it saved up? Where is it? You have to document it. It has to be showing and proving that you've had 2 months seasoning. It's been there. If you're telling me it's under your mattress, that does not work. No one will accept that. Can't use cash when you're talking about real estate in this day and age. So determine your down payment. And again, you're going to have that conversation with a licensed loan officer from the mortgage banker, not from the big bank. And they're going to help you. That'll be part of the game plan that you're using to get this going. As you're going through this whole process, you're going to be filling out an application with all of the documents that we've talked about. Now we're talking about pay stubs, tax returns, bank statements, W-2s, all of your asset statements. It might be a stock brokerage account, asset account, retirement account, all of these different items. And all of that is going to be to get you pre-approved and maybe even pre-underwritten. Yeah, that's a different term because very few people talk about pre-underwritten, where you've got a full underwriting approval before you go out shopping. Now you can be almost acting like you're a cash buyer. You'd get rid of that loan contingency if you stay within the guidelines of what your approval is. And again, you've got to make sure that you're listening to the loan officer of what they're telling you to do. You need to gather your proof of income. You're going to have the W-2s, 1099s, pay stubs. Your lender's going to want all of those different documents. You're going to have to provide names and addresses of the employers for the last 2 years at least. You're going to need documentation of your Social Security if you're of age, or disability payments, pension incomes, child support, alimony, overtime. All of these items go into it. So gather all that documentation. If you have all of these things down, if you get all of this done, it's going to make the entire process significantly easier. Gather the proof of assets. Again, that's your retirement statements, your bank statements, your brokerage statements, if you have any of those, all of that documentation. Gather your tax returns. You're going to need 2 years worth of tax returns. If you're self-employed, you might need self-employment, those returns. Closely held corporation that you own 25% or more of, you're going to need the business returns. You might need K-1s on there as well. All of this documentation is going to go into the entire process for you. A great loan officer can talk to you about down payment assistance programs. Again, if you're a little short on cash, that's what I was chatting with you about just a minute ago, the down payment assistance programs. Once you do all of this, get it all gathered together, then you're in a better position to make an educated decision. And if you're working with a great loan officer, a great loan team, they're going to also have some. Think about this. If you went through this entire process and did all of these things with somebody that you feel is extremely experienced in the industry, well, I'm going to tell you that they're going to also have a relationship with a real estate professional. And they'll be able to, they've already done the due diligence for you to make sure that that real estate professional knows what they're doing, knows the industry, knows the area that you're in, and they have a good working relationship with one another. If they've got a good working relationship with one another, then they're going to be able to work together to get you the best program and property for your family. So ask that loan officer, hey, who do you work with in Encinitas? Who do you work with in Carlsbad? Who do you work with in Mission Viejo? Who do you work with in whatever city you are looking at? Talk to them about that. They'll be able to help with that and get you introduced to great people. And then you start looking and saying, now we haven't even talked about loan programs out there. There are several loan programs out there that are unbelievable, especially right now, because when we're looking at where the interest rate market is, and again, I'll talk to you in a minute in the next segment a little bit about what the Federal Reserve is talking about when it comes to interest rates, where they're heading with interest rates. But right now, in certain areas, you've got there are two different programs that will allow for a zero down payment. These are government-sponsored programs. The government doesn't really lend money directly. They go through intermediaries. But FHA has their 3.5% down payment, but they will also look at there's down payment assistance programs that go with that. Now, I'm looking at right now, think about this one. On a $400,000 loan, you're looking at 3.25% if you're well qualified, rate and APR on a loan program, and there's absolutely no costs to you as far as on the loan itself. Now, there are FHA fees in there, and you're looking at $1,741 principal and interest payment. Again, you've got to add the mortgage, insurance, taxes, insurance, and HOA. That's a $400,000 loan. Think about that. That could be looking like a $2,500 total monthly payment. VA, you've got no down payment, and your rates are just about the same thing. Again, no money out of your pocket. VA is a great loan. And again, look at those APRs on there. Amazing. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, the Fed says they will raise rates this year, so we will chat about that. Continue our conversation on some of these programs. Maybe we'll talk about why I don't believe you want to have a lot of home equity. All that and more. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We will be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
The Honda Summer Clearance Event is on now at your San Diego Honda dealers. Choose from a great selection at clearance prices. Go to sdhondadealers.com to find your nearest dealer. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio. or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by AskAboutReverseMortgages.com. If you are ready for that reverse mortgage, there's a couple seminars coming up. Jay Kaplan's going to be doing those with us coming up, I think it's next week. Maybe it might even be this week. So Jay's going to be chatting about these issues, these items. Got some great information. He's one of the most knowledgeable people I have ever met when it comes to the reverse mortgage programs. So I really like having these conversations with him. I think it'll be very, very beneficial to you. So if you want more information on his upcoming seminars, just let me know. I'd be more than happy to put you in touch with Jay and get that information to you, get you an invite to his upcoming seminar. I think he's doing lunches and dinners, so great opportunity to meet with him, have a conversation with him. Again, Jay Kaplan does a great job with these seminars and just a great educator. He's got a book and the whole bit that he gives out to people to help them with their making a decision and understanding what they're all about. August 18th and August 27th are the upcoming dates of the seminars that Jay's going to be doing. They're going to be in Central Orange County. If you want more information, again, give me a holler on that. The Federal Reserve, they've come out, they said it, they are going to be raising rates. They want to raise rates. So the question becomes when. So now that we know that they're going to do it, the only question really is when will they do it? And Reuters has an article coming out, and I'll share with you in a second why I'm bringing this up to you. And again, we don't know exactly when. But according to a poll done by Reuters, it predicted that there's going to be a pickup in the economy and that the Federal Reserve, again, they've talked about wanting to raise rates. They're saying that they will raise them at the December meeting, at the December Federal Reserve meeting, the Open Market Committee meeting. Why December? Well, the Fed generally and historically does not like to get involved when it comes to elections, presidential elections. So they are generally very hesitant to increase interest rates or reduce interest rates right around or right before a presidential election. We're less than 3 months from a presidential election. So the first available opportunity would be at the December meeting. And then they're talking, the predictions again are that they will raise rates again next year. Now, they've said this for many, many years, and then the economy comes out and says that we're not strong enough economically. The numbers, the data comes out and shows there's not enough economic strength. Now, they did raise rates this past December, and so now we're looking at maybe this coming December again. Now, there's a lot of economic issues going on that may change this whole concept. A lot of them are geopolitical economics. And I was just looking at an article during the break. I get a lot of these things come through to me. And this one that came through during the break talking about that there's a tremendous amount of debt in the European Union that in most instances most of us would refer to as bad debt. They're talking about non-performing loans in the European Union as a whole, 9% of GDP at the end of 2014. That's equivalent to 1.2 trillion euros and more than double the level of 2009. And the persistent sub 3% GDP growth is having political consequences throughout all the developed nations, but particularly in Europe. Think about this. Our GDP here, we came out with about 1.2% is the last reading we had. And if that can get up to 4%, we create a lot of new jobs, a lot of revenue going into the governments, in all governments around the world, and then you don't have this same stress, but we're not performing like that. But if we were performing there, that's when we're looking at the idea of raising rates. Makes sense. When you're performing substandard, raising rates does not make sense. But it doesn't matter. The Federal Reserve said they want to. A very, very old theory whenever we talk about economics, don't fight the Fed. So the Fed has said they want to raise rates. Now they're at the point where they've got to save face because they've said it so many times that even whether the numbers are good or bad, they probably will. How does that affect you? What does that mean to you? Well, if you've got a home equity line of credit, then the likelihood is that means you are going to see that line of credit. Almost every home equity line of credit that we know of is tied to prime rate. Prime rate is tied to the Fed funds rate. Mortgages are not tied to the Fed funds rate. There are some loose correlations, but they're not tied to those. Home equity lines of credit are definitely tied, and they are going to go up if the Fed increases rates. So why do I bring that up to you? And here's one of the big issues that's involved there is take a look right now before the Federal Reserve acts. So when the Federal Reserve does that, it's going to mean that there's going to be a trickle-down effect in a lot of areas. You want to and that's why so many people, even though we know that when we talk about stock market, we know the idea of the stock market is buy low, sell high. But a significant amount of people buy high and sell low. They lose money. Why is that? Well, it's because they're operating out of a have to instead of a want to. The have to is they've got a required mandatory distribution for our seniors. They're trying to buy a house. They've got to sell to get the down payment money. They've got a college, a wedding, all these different items that are times where you need the money, need liquidity, but didn't plan ahead of time. That's why I'm really pushing folks right now. If you have the opportunity to get your home equity line of credit rolled into a new first mortgage, even if you're not saving a boatload of money, get the risk factor off the table. If you have the opportunity of refinancing and getting rid of your mortgage insurance, do that. Because once rates start going up, well, by definition, prices up, sales down. Now, historically, when rates go up rapidly, prices will still go up on real estate. Short term. But eventually, the higher rate, it just makes sense. Think about this. I was sharing with you before the break about the 30-year fixed rate loan, right? I was telling you that, a FHA loan, 3.25% rate in APR. It's going to be a little higher APR because you got to add the mortgage insurance in there. But I'm just trying to give you an example. I'm not trying to get you I'm not giving you a rate quote. But you've got a fixed rate loan, in the mid threes. Think about those numbers. If you can get rid of that home equity line of credit, many people are at 5.49 right now. If it's going to go to 5 3/4, 5.5. I'm sorry, 5 3/4 or 6. Roll that into a new fixed loan, get locked in, and then you don't have to worry for 30 years. You can make strategic decisions, but you're not reacting. Reacting is when people will start selling low and buying high. That's because they're reacting to the market instead of planning for the market. We want to be planning. We want to think ahead. That's why I frequently will tell people, an emergency fund, you need to have it. How much do you put in there? Ideally, 2 years. Not everybody has that kind of liquidity. So do what you can. 6 months, 3 months. But those are the numbers that will say, okay, if I get hurt, if I have an unexpected illness and can't work, my family doesn't suffer because I've made plans for that. I don't have to go and sell stock when the market is not ideal because I haven't planned for it. You plan ahead, you're in control. You sell when you want to. That's why I've also chatted with you about talking to Jay Kaplan seniors about having a standby line of credit reverse mortgage in place. Does it mean you have to draw on it? No. But instead of taking money out of the stock market to live on when you have to, you take money out of the market to live on when you want to. And you've got the standby line of credit for the times when the market's not ideal. You can pay it back anytime you want to, or your heirs can pay it back when you're gone. But again, it's all about the plan and working a plan and understanding. We're talking about planning a lot today. So I just want to give you that idea, that heads up, understand it. And obviously, I'm going to ask you, like I do every day, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Our house in the middle of our street, our house.
XAPA 1700 AM Kita balikan.
You're listening to ESPN Radio 1700. There are two kinds of hot.